We're risk on still, Steve. I think there's a couple of good trades that we're eyeing this week, though. Nice one on gold for me.
Yep, and DAX is breaking out to the upside too.
Hello, everyone, and welcome to another of our Trader Talks videos with myself, Richard Perry, market analyst at Hantech, and also Steve Miley, the market chartist. Now, as ever, we'll be pointing you towards our website at hmarkets.com, where you can sign up for a demo account very quickly or a live trading account in 4 easy steps. Now, Steve, we're still risk on, and I think this is such a significant move that we've still got to play. This is a momentum-driven move for me. What do you see in these markets?
Yeah, completely agree. You can't fight this risk on move. We've had and the other thing I think to say is, we've had a kind of a bit of a sideways to positive kind of risk on kind of play for the last week or two.
Bit of a consolidation for the last couple of weeks, certainly.
Exactly. So that's allowed markets to, and there's no kind of overboughtness, there's no kind of exuberance on this. And we've got some, I'll just run through some of the key macros, that we were talking about earlier. So, you've got, the transition of power starting, so the Biden bounce continues. Janet Yellen, probably going to be, it's going to be the US Treasury Secretary.
Very dovish, Janet Yellen, and she obviously works very well with Jay Powell as well. We know that.
Exactly. And markets are liking that as well. And obviously, three now vaccine results, which 3 on the table looks better than 1 on the table. So markets are getting excited about that. So. And the data is actually starting to improve in places as well. Kind of mixed, but don't forget the macroeconomic data is looking fairly healthy, relatively healthy.
We do still have caveat though. I mean, obviously this second wave lockdown is not all that great, and you're still seeing economies shutting down, and how they're going to be re-emerging from that obviously is going to be important. But I think 2021 is set up now with these vaccines for being a fairly positive recovery. It just depends on how far and whether these markets have just got ahead of ourselves.
Yeah, agreed. So I'm going to take a look
at the DAX.
Yeah, that's right. So with the DAX, we've had that consolidation. We've broken out. We've taken out that peak at 13,297 that we posted up. That was the Pfizer peak. That was the peak that when we hit when the Pfizer announcement came out. So we've taken out that peak, nudging up now towards that 13,340 level. But critically, then the peak, the actual high we saw from back in September, up at 13,460. So. Having had that consolidation above 13,000, any kind of dips back down towards there, I think, are going to be buy opportunities, stop below there. The RSI is supportive as well. And then critically, I think if we do take out that cycle high at 13,460, you've got then a gap over from February, March, from when the wholesale off started. That's up to about 13,500. And then you've got the all-time high at 13,795. We could be there, right?
Yeah, I mean, it really depends on how bullish you want to be about this one, because if you take this as consolidation within a flag pattern, we could be going considerably higher. Certainly if you break out above that 13,795 all-time high. So you could, in that instance, be measuring sort of 14,500 to maybe 15,000. So this is really strong territory that I think the DAX really needs to be pushing on from. And if it can do that move, you've got the RSI nicely coiled around that 60 point. If it can start to move into the high 60s, we could really see some upside moves through these equity markets in the latter stages of 2020 and into 21.
Yeah, and talking about latter stages of 2020, we've got Thanksgiving just around the corner, and we have all the seasonality that goes around Thanksgiving, which is generally stock market positive, and then the traditional Santa rally that we often see. So is the consumer going to be there? Well, from what we're seeing on the travel, I don't know if you've seen that travel information in the US, huge amounts of people traveling this week, even though we've got this these spikes in the US. So that says to me there's real threat that we get the consumer back out there and we can have a real strong end to the year. Certainly up to the old high though, up to 13,795 and possibly towards 14,000.
Yeah, I think it looks positively set up now, the DAX, and obviously Wall Street is helping that move.
Indeed. And you're looking at gold though on the flip side.
Yeah, well, we are very much risk on this side, aren't we? So, and what we've now seen is that in recent weeks or recent few sessions, we've now seen the gold price moving from a risk positive asset play to a risk negative, risk off asset play, and it's now correlating positively with the dollar. Now the dollar is your classic safe haven at the moment. Dollar under pressure, gold under pressure, and I think that is driven that move on gold below that 1848 key floor of support that we had throughout the summer. Now that breakdown, I think you can imply that breakdown moving back towards the mid 1700s. Not only that, we've seen 1835, that 38.2% fib level being broken. And now that means that 50% fibs on the way, and that is around the 1760 mark. So really interesting that we're seeing these moves coming. Gold flipping from risk positive to risk negative alongside the dollar. I think that means you're selling any gold rebound into strength, and that old support 1850 becomes a basis of resistance.
Yeah, no, I'd agree on that one. That it's really interesting, this flip around that we've seen in gold, previously being negatively correlated, now positively correlated with the dollar. The dollar still looks weak, so that implies then gold potentially going to be pushing lower, and it is taking back its kind of more traditional. It's always vies between being moving in the opposite direction of the dollar, inverse correlate to the dollar, but then also as a safe haven, and now it seems to be moving back to that safe haven. And interestingly, we've got dollar yen popping back higher again. So the yen almost retaking its traditional role as the safe haven currency. So the dollar actually, although weak everywhere, this week has popped higher against the dollar up versus the yen. So the yen going back to being safe haven, the gold going back to being safe haven. So I think you're right. There's potential significant downside in here for gold.
Yeah, I think so. I think it's obviously been sort of driven a lot of the time by those COVID vaccines, and we are seeing that move, I think, coming now. And as 2021 economic recovery takes hold, you see real yields going up. I think that doesn't bode especially well.
Indeed, agreed.
Well, excellent. Thanks a lot, Steve, for another good chat, and we'll speak to you all next time for some more trader talks. Thank you.
Thank you.